Welcome, and thank you for tuning in to the American Investor Show. Please click subscribe if this is your first time listening. From trader and CEO interviews to breaking news about companies you won't hear anywhere else, nobody does a better job at keeping you in the know when it comes to penny stocks. The term penny stock generally refers to a security issued by a very small company that trades at less than $5 per share. Penny stocks are extremely risky, yet they offer rates of return on investment not seen anywhere else. The host, guest, and callers are not registered financial advisors licensed by any government entity, and therefore, the following should be considered entertainment. The host, guest, and callers disclaim all liability in the event any information, commentary, analysis, opinions, advice, and/or recommendations prove to be inaccurate, incomplete, or unreliable, or result in any investment losses. Before investing in penny stocks, you should consult a professional to determine what strategy may be best for your individual needs. Now, without further ado, your host, LaSalle Anungu.
Yes. What's going on, everybody? It's your boy Sal in the building right now. Welcome to the show. This is episode 344. Shout out to my sponsor, Black Box Stocks, for the best algo alerts. You are looking to day trade. It's blackboxstocks.us. That's blackboxstocks.us. Hit them up. Shout out to the people coming into the chat room and to the people watching in the future. I know a lot of people like to watch the recording during the trading day. Just want to let you know that we're sticking on top of things here, ladies and gentlemen. And in the last episode, we talked about the possibility of a two-day bounce. Well, come now, we got the third day of the bounce. All right, the third day of a bounce. You saying you can't hear me, Felix? You can't hear me? Press 1 if you guys can hear me. Somebody saying they can't hear me in the chat here. Let me say, somebody saying I can't hear me. What's going on, JT? Okay, all right, you guys can hear me? Okay. All right, I mean, I don't know what it is. We always got one guy who's always using an Acer computer in here. So, Felix today, I guess, the backup isn't working. It's you on the Acer tonight. He's on the Acer computer tonight. But shout out to everybody who's in here right now, slowly coming into the chat room. It's kind of an impromptu show, but I'm here because I wanna pick your guys' mind on where the market could be going. Again, we fully were on board for a 2-day run. Now it's a 3-day, and looking at after hours, it looks like we're going to have a sideways day so far tomorrow. Of course, news is always coming out. So we're always staying on top of that. But right now, it looks like it's going to be sideways tomorrow, but possibly another up day. So, right now, it's by the rumor, but I believe it's going to be sell the fact. Everybody's excited about the possibility that the interest rate cuts could be coming as soon as this month. And here's why, ladies and gentlemen. The job numbers for May come out on Friday. A lot of you guys in here who are watching this right now, you're not aware of that. But the job numbers come out on Friday. They need a really bad number. They need a really bad number tomorrow because that justifies the rate cut. Right? It can't be a good number. If it's a good number, I can't justify cutting interest rates. We already have some estimates coming out of 180,000. Last month, the number came out on May 7th or 8th. I think it was 8th. I think it was like May 8th. Oh, no, actually May 3rd. Excuse me. It was May 3rd. 263,000 for May. Excellent number. In fact, that was one of the, many people's thesis for the market continuing to go higher, because that was a sign that the market it was healthy, right? That the economy is healthy. There's a lot of jobs out there, blah, 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 blah. And then, of course, the subsequent days, China and U.S. decided, okay, this ain't going to work out. And then it all came falling apart. But that was the justification at the beginning of May for our all-time highs. Obviously, as I just said, the China situation, now Mexico. Trump last night came out and said that he's cooling off the tariffs on Mexico, not meaning he's getting rid of the 5%. He's now not going to be increasing that. I showed you guys on last show that the initial conversation was a 17% tariff being applied to products coming out of Mexico. Now we realize now it's just basically going to stop at 5%. The market likes that. The market likes that. And now with this rate cut talk, the market loves that even more. And here's the thing about this rate cut conversation that a lot of people really aren't, I feel like, taking heed to, is the fact that if we need a rate cut, that tells you more than anything that something's not right. That the economy, there's something out there that's broken right now. I'm going to continue to reiterate the fact that, many of Americans are tapped out. All right? Many Americans are tapped out. 7 million car loans right now past due 90 days. Home sales lower than in the last 7 years. New home sales. So if we need to cut, because we understand that this Fed that we have, led by Jerome Powell, which I'm just going to start calling him J Money, that J Money doesn't have the tolerance for what he had the tolerance, and then Trump started to punk him, and then all of a sudden he bent over. But they know they're going to come to the rescue. Jerome Powell, he's going to come to the rescue. Instead of, following his designated path, which is the fact that the Federal Reserve is an independent organization outside of the control of the federal government. Now, you can't tell them apart from the White House now. Let's be honest. You can't tell the White House and the Federal Reserve apart now. And I'm in full agreement with guys like Peter Schiff and so many of the other bears out there that this isn't going to work, man. This is not going to work. This rate cut is not going to work. And we're seeing it already when we look at the price of gold. When we look at the price of gold, we're already seeing the fact that, people aren't buying it. They aren't buying the fact that this rate cut is really going to help things out in the long term. South Africa came out yesterday. GDP first quarter, negative 3.2%. Negative 3.2%. South Africa happens to be probably, I would say, the most mature economy in Africa, but it's one of what they call the BRICS countries, right? Which are basically that kind of, beyond kind of developing nations. They're about a level above that. So people pay attention to what those kind of economies are doing. All right, I think BRICS is Brazil, China, India, South Africa, and I want to say something else. I think I may have skipped the R, which is Russia. Yeah, Brazil, Russia, India, China, South Africa, I think. You don't have to do your research on that. But the GDP of those countries, that data matters. That data matters. So something is going wrong out here. And we need to really stay in front of it, man. We really need to stay in front of it. We're going to look at your tickers today. Shout out to everybody who jumped up on my NVIDIA for the next day pop. That, NVIDIA was red. Very, very, very red. That last episode we did on June 3rd, and I said, look, NVIDIA is going to be the buy that next day. And shout out to the people who jumped on it. Of course, I took my own advice, and it was the first stock that I watched in the morning. And sure enough, if we go back to the 3rd, which was the 4th, the 4th. The 3rd was the night I did the show. The 4th, it was basically a runaway morning. Beautiful, beautiful morning out the gate. A little bit of hesitation, but the market took off, and many stocks took off on the 3rd as well. And the 3rd was really the day that jump-started this buy momentum that, some of these bulls have been enjoying for the last couple of days. But today, the winner, of course, of the day was Snap. Snap was your winner today on the New York Stock Exchange. Monster day for Snap. Black box stocks, we really took over. I mean, we just killed it on that Snap alert today out the gate there at about 10 o'clock. So monster play. But yeah, I mean, that's basically where we are right now, guys. I mean, that's where we are right now. Again, we're headed to, interesting levels on the RSI that personally, a lot of guys are here. They're in, right? They're going long here. And I don't blame them. We're above the 50 RSI, and we haven't been there in almost a month. So actually, we haven't been at that level for a month, right? Yeah, this is your monthly breakout on the RSI, right? We haven't been there since May 7th, right? We haven't been there since May 7th. So guys are going long here, and I don't blame them. Because that's what the technicals say. But I continue to believe that all the money to be made is still on the downside if we're talking about the long-term trade. What's going on, Desert Edge? Ghetto Stock Trader, T. Kelly, George M. What's going on to everybody in the chat room right now, climbing to the top? So give me some of you guys' tickers right now. What are you guys looking at? Let's take a look at what you guys are looking at. All right, and I'll go through my spiel in between what you guys have to offer. Yeah, Tesla with the bounce as well. Well, Tesla was a low RSI bounce. Tesla was a very, very beat up stock. Again, this is another company that's really, really losing a lot of money, and and it just gotten to a point where there's still some fanboys out there. And although I felt like there was still a lot more selling that could have taken place here, overall the market was bouncing, so it really helped alleviate the selling pressure, at least for the last couple of days here in Tesla. So it's hard for a stock that's popular to go down when everything else is going up. When everything else is going up. That's why, crappy stocks that lose money like Square, or I think even Wayfair, right? Even Wayfair. And I mean, these stocks that lose, hundreds of millions of dollars every quarter, when the market does really good, even they rise. And these are really shitty companies. Wayfair is at the top of my list of incredible money-making opportunities when we talk about recessionary environment and tight credit. Because companies like this won't be able to get money to continue to build out. They're already over-leveraged organizations. Yeah, these are companies that have borrowed so much to the hilt. And that's why this credit or this rate cut is actually going to make things really worse, because now there's more incentive for banks to push out more debt, and in an environment of decreasing revenue, and you're now taking on more debt. How do you pay that debt back? You already are having trouble paying back what you've already taken out. And we saw the case for that back in October, November, right? During the rate increase, right? The excuse was that, hey, these companies have taken on so many debt, we're raising the rates. How are they supposed to pay back this money that they've taken out? So now revenue is going down, so less money is coming in. I need you to understand that. Less money is coming into these companies. All right? Individuals have less to spend. These companies are taking in less, but their debt is increasing. So either way, it's a lose-lose. Either way is a lose-lose. And I need somebody who has the long view to show me the picture of the path back to all-time highs with the numbers that are coming out from these other countries. You know? I haven't talked oil very much. I'm going to talk a little oil in a bit. Let's take a look at some of your tickers. What's going on, Kelly Rob? TEMU. I'm not pulling up a ticker for that. TEMU. Not pulling up a ticker for that. So I'll look at October. Yeah. October 2018 SPY. Yeah, yeah. Absolutely. You played the XOXL bounce. Okay. That's a good one. Yeah, all these inverse plays are really, really fun to trade on bounces because they really do work. I mean, XOXS, TQQQ, they're fun little stocks to play. The options not so much because the spreads are horrible. But the stocks, yes, very liquid as well. Very, very, very liquid. Right? Yeah, nice BYND. And it's so interesting because I posted this on Twitter because the algo, the alerts that were coming out of the algo were very much slanted to the sell side. So BYND is going to open up at 115, 117, but 120 is very much a possibility here. I don't know what that intraday RSI is going to look like. All right, it's going to be ridiculously crazy, but you got to understand a lot of people are short this stock, and they're going to have to cover tomorrow. So even if it opens up at 115, even if it sells off a little bit in the morning, I'd look for a buy signal because you got a lot of people who are short this thing, and it's going to be a really ugly day for them tomorrow on BYND. It's going to be a very, very ugly day for them. It's going to be a very, very ugly day for them. And I saw the number. It wasn't a pretty number. Appreciate you, Desert Edge. It wasn't a pretty number for Beyond Meat, a little fake meat product. They generated, again, this is a company with a nearly $7 billion valuation. $7 billion. They generated $40 million in revenue for the quarter. $40 million. This is a $40 million revenue generating company per quarter. Right now, anyway. And by the way, that number, that 40 million, takes in part that it was a 215% increase from the previous, from same quarter the year before. So Beyond Meat has a valuation, far, far higher than what it actually brings in. I mean, the market is pricing in so much future potential value in here. It's a little bit crazy. Understand that I think if I'm smart, no, not necessarily Desert Edge. 10x, 10 times PE, for a company like this. It's a food processing company. They're a food processing company. They shouldn't have a tech, PE level right now. But I think they're up there. In fact, if someone could look it up, TD Ameritrade, or excuse me, not TD Ameritrade, but TradingView isn't giving me the PE. But if one were to be calculated, because TradingView does take in consideration that the company's losing money. So when they don't show you a PE, that's just a sign, hey, this company's not profitable. And Beyond Meat is not profitable. But at the valuation, $7 billion, and current revenue, or for the quarter, $40 billion, that's less than 1%. That's less than 1% of market cap, right? Because 1% of 70 billion, oh no, 1% of 7 billion is 70 million. So it's got to be less than 0.6. So less than 1%. Yeah, I'm right. Less than 1%. Less than 1%. So there's a huge amount of value here that could possibly get into the hands of the short bias traders once things really, settle down here. Once things really settle down here. And things will settle down. Trust me, things will settle down. There was a company that makes what was that company that make GoPro? That makes cameras? Oh my God, everybody thought GoPro was just gonna be, they're the company of the future. Blah, 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 GoPro. Month after month, everything seems so good. I remember. I just started really taking trading seriously at the time. This is 2014. I was promoting here on YouTube. Really just started getting active with it, but I wasn't trading at this level. But GoPro was just one of those companies. Again, it got to $95. Now it's a $6 stock. From 95 to 6. Why? Because people realized the valuation was insane. Other companies came into the marketplace. Camera phones got good, right? Camera phones weren't so good in 2015. And that's why I believe when we talk about Beyond Meat, all right, BYND, I still got to memorize the freaking ticker. When we talk about Beyond Meat, we got to understand that the legacy companies in the food processing business right now, they're not in the space because the market isn't big enough yet. It's not big enough just yet. But eventually, when a market has developed and matured to where it makes sense for a large player to enter the space, Beyond Meat is not going to be able to maintain that kind of valuation, particularly against the pricing power of a large competitor. All right. And then at this valuation, that makes an acquisition, Beyond Meat as an acquisition target out of the question. People say, well, they might be able to sell themselves to not at this price. Who's going to buy that? Who's going to buy that? What are you going to pay? And what are you getting back for that kind of money? All right. So let it go. Let it do its thing. Hey, for y'all who are making money on it, man, do your thing. Do your thing. Do your thing. Take advantage of this, right? I mean, from 45 to 120, oh, man, that's a killer move. That's a killer move. In fact, there's a great website called Unicorn Market Cap. I think is it Unicorn? Unicorn Market Cap. I think it's Unicorn. Is it Unicorn Market Cap? Let me see here. Some of you guys might know what I'm talking about. Let me take a look. Yep, unicornmarketcap.com. And you can put in, it's a FOMO calculator. It's a FOMO calculator, and you can literally put in, if you had invested X amount of dollars in so-and-so unicorn play, this is how much you'd be up by now. Because everybody knows it's bullshit. Everybody knows these companies are bullshit. All right. Yeah, I saw that red candle, but again, that red candle is because it's June, and we've had a little bit of hesitation in the stock over the last couple of days. It's still very, very early on that monthly. So let me, for that person who said that, let me show you here again. Yeah, we're in June now, so we've had a couple, sideways days and Beyond Meat. So it looks very bearish, but you got to understand that's just, 6 days or so that we're in June right now. All right. So, yeah, the last couple of days, right, we've got pretty much no movement. But tomorrow we're going to get a huge bar on Beyond Meat. It's going to really break out and move higher. So you definitely want to be on the long side of Beyond Meat. Now, if things go too crazy and, you open up and people just start dumping, then, that's the risks there. But for what it looks like, you're going to be having a nice-looking short squeeze there tomorrow. Oh, absolutely. Absolutely. It's the same thing. It's the same thing. You heard Del Taco ads for Beyond Meat on tacos on the radio. Yeah, I mean, that's the push. That's the push. That's the push. I'm telling you right now, we're going to see this. We've seen on this show so many companies. Oh, my God, it's going to go here. It's going to go there. It's going to go, what was that? It was Shake Shack, I think, was also one of those plays as well. I mean, yeah, I remember. Again, ridiculous valuation. It's a burger. They sell hamburgers. And at the time, this is 2015, they had, I don't know, maybe like 120 locations. It was at $93. They have a $2 billion value. I think at that time it was like maybe $17 billion. I'm sure you can find the articles on Google. $17 billion. They gave them the same valuation of a Wendy's that has like 2,000 stores or something like that, or 1,000. And it just fell apart after that because people, the market always will figure it out. And you had this, another failure. I don't know what was going on here. So look to the past, and these things just kind of come and come and come. But if you read books by Warren Buffett, his hero, whose name escapes me right now, who happened to be his professor at Columbia, they talked about how the market can allow stocks to trade at valuations for months, even years, above appropriate levels. So it can very well do this for a very, very, very long time. Very long time. You work for PNRL. You wish you can buy shares to short. Are you not allowed to buy stocks in your own company? I didn't know that companies could do that. I mean, I figured that if there's anybody they want to buy their company, it should be people who work for them. Is Grub a unicorn? It was, not so much anymore. It was, not so much anymore. Grub is another company where valuations just got ahead of it. It's just still, trading at 105 times earnings. Still expensive. There was at one time, again, this was a company that was trading at 240, 250 times earnings. $250 for every $1 of earnings. So you're putting up $250 to get $1. The market realizes. Now you had Uber Eats come into the marketplace. You've got these other smaller players, regional players coming in that aren't publicly traded. I saw one ad where it's like a company that brings you candy and shit. Like if you want gummy bears sent to your office and stuff like that. Pretty weird. But yeah, Grub hasn't been doing so well. Sure, there's probably still some meat on that bone, but you're gonna have to look into it a little bit deeper. Obviously, the real meat and potatoes was here at the top, right? I mean, trying to figure out where, this could fall apart. And Again, if you saw my RSI video, how to trade RSI the right way, you can look at this and, we've talked about, again, 80. Yep, that's appropriate. And then 40. And then we can see how the stock was using 40 as support, right? That's what John Hayden was talking about. John Hayden was talking about how, again, in bullish, in bull mentality, I don't know why I'm fucking up today, but in bullish momentum, 40 is your support. 40 is your support. So the buy zone is always the smack on the 40. That's the high probability buy. All right, that's the high probability buy. All right, and as you can see here, it cracked 40, went significantly below, and then during time of I don't know why I used red. I actually should be using red for the sell zone, but the sell zone, 20 is your support, and 60 is your resistance. And if we do that, look what we find. In fact, I'm a little bit short of it. Look what we find. Just like clockwork. Like clockwork, right? And then we see the top. The top is the break, right? The break of the zone, when the inability to hold that 40 RSI that I've already dotted out there, that was the zone break. Boom, broke down below it, right? That was your RSI support break, going all the way back to when the trend really began, all right? Really, really interesting way to look at RSI, and I really suggest you guys get that book, because that was just a fraction of what you'll learn in that book. But when you look into stocks through zones and trying to figure out, so now we know Grub is in a very bearish zone right now. So there are going to be a couple ways that you want to play this. Either we try to look for another way to short it when it hits 60 and rejects, right? Or we look to buy it when it dips to the 20. Absolutely, Desert Edge. Yeah, a lot of value has been doing. But, I mean, look, we've lost a lot of value here recently, right? If we talk Apple, Amazon, and, Microsoft, actually, just the FANGs alone. Forget those companies. The FANGs alone, $150 billion lost on Monday. $150 billion lost on Monday. I'm telling you guys, in recessions, in down markets, it's not you and me who loses the most. It's the wealthy. That's why it's so important for them to rig the game and keep things hot. All right? That's why they want this Fed cut so badly. Unlike normal people, they understand the key to wealth is either through real estate or equities. So, hey, if you don't really fuck with real estate like that, then you over leverage yourself or your financial situation in the equity market. And over generations, you grow wealthy, the market goes up, and recessions really hurt you. Really hurt you. Because you only have two choices. You either have to sell and claim taxes on your gains, which could be, over a couple generations or just over the course of your lifetime as an independently wealthy person. Or you, suck it in and take the losses as your net worth decreases. All right. But as a person who has less than $1 million liquid, you're more nimble, you're more agile, you're able to kind of go, in and out or make plans to adjust. And I'm not saying these people go broke. None of them go broke. It's just that it hurts them more than it hurts the normal person. What's going on, Money Stay Woke? Appreciate you. Daily, weekly, it doesn't matter. Obviously, again, on a weekly chart, any indicator you use is going to be more accurate because that's more. Every candle is more information. Every candle is more information. But I like the daily, just because I want to know, if I'm going into a trade intraday, like say if I get a black box alert like we did today on Snap, I want to know, has this been trending up or are we going lower? So if it's been trending up, which Snap already was trending up, then I know that a long signal, that's a high probability that this could be the real deal, and sure was today with Snap. Sure was today with Snap. Right. But if we have a stock that's been trending lower on the daily, and then we get a signal for a buy alert, either that stock better be below 20 RSI, or I don't want to touch that. We're trending lower, but all of a sudden we got an intraday buy signal. I don't know. I don't know if I want a part of that. Unless it's news generated, and even then I don't want a part of that. What's going on, Shirley Lewis? Ben Graham. Thank you, Jermaine Gill. Yes, sir. Ben Graham's great book, too, by the way. God, that was like one of the first books I started reading. The Intelligent Investor. There it is. But the book that talks about it's not The Intelligent Investor. It's what's the aim of that other book? Securities Analysis. Security Analysis. That's the book that talks about, which, by the way, if you read Securities Analysis now, it could nowhere survive in today's market. I mean, it not to say it's outdated. It's just that the market just has no respect for valuation anymore. Ben Graham could never. He'd look at the tickers today and he'd just be outraged at the valuations that some of these companies trade at today. He'd shit in his pants. Very much, hey, look at the fundamentals and appropriateness of valuation. And you look at some of these and it's just, they're not properly valued. They're not properly valued. That's why, a few episodes ago, we were talking about that Apple situation with Warren Buffett. And if you listen to the way he talks about his Apple purchases, like my team, my team, my team, my team, because it wasn't him. It wasn't him. It wasn't him. He bought it literally at the peak. I think it was like at the peak up here. So they've been taking so much a big L on their Apple purchase right now. And the market is really the mainstream business media. They love Warren, right? They look at him like Big Papa Warren Buffett. So they've been really protecting him. Anybody else, they would just shit on him so bad on that pick. If the Fed don't lower interest rate just June, meaning the market coming back down, yeah, I agree with that. But they're buying the market now for anticipation of that rate cut. Again, and not to repeat myself too many times, but that's your justification to continue to stay looking for a possibility that this could get ugly real quickly. This could get ugly real quickly. Again, I just want somebody to give me the reason for us to keep going up after the rate cut. After the rate cut. Say Google is a loss. Well, you got a lot of haters right now with a lot of these IT companies, right? I mean, Google, Facebook, you got a lot of haters who are going to Trump and basically saying they can't compete because they make shitty products. And when you make shitty products and you can't compete, but you've got the ear of the president, you can still get things done. Google and Amazon and all these companies they make good products. That's why they're at the top, man. It's so funny when people start losing, all of a sudden the game ain't fair. All of a sudden the game ain't fair. All of a sudden they talk about capitalism and free markets and free market and free market. All of a sudden, now you don't want to be a free market. Now it's like, well, they're too powerful and the market is it. What happened to the free market? These people just come up with rules whenever they want to, man. Changing rules. They'll teach you about, independence and all that stuff. It's not a free market, man. These people making it as they go along. They tried to break up Microsoft. For those of you guys who are old enough, I was just a kid then, but I remember some of the articles. I remember seeing it in the news. You can Google that. The government tried to break up Microsoft. Who God knows how behind we would be if they had broke up Microsoft. We don't even know. McDonald's entry 203 with a stop with a target price of 221. Yeah, I mean, right now, if you're going long McDonald's, again, McDonald's is another one that's just, what a beast, man. And I've talked about McDonald's here on the show, these last couple shows now. It's a beast, man. It's a beast. But again, a good company that's just been generating revenue year over year. They're constantly creating new products, constantly getting people to buy that disgusting food. And, they keep winning, man. They're winning globally, winning regionally. I mean, here stateside. Although, again, I've talked about sales revenue declines stateside. Their international presence is, out of this world, man. You go to places like China and Asia and India. McDonald's is there. He said Trump needs to win the election. Well, the Democrats don't have nobody to beat him yet, so he probably could win. Appreciate you, sir, Shirley Lewis. What's going on, Juan Diaz? Got Penny Stocks is my Twitter name. I'm so ADD about my name. I just can't figure out a damn show for this shit. A damn name for this shit. If I could figure out a damn name that I'd be happy saying every damn day, I wouldn't change it so much. All right, so let's keep it going. What else are you guys trading? What else are you guys trading right now? All right, I'm keeping my eye on some plays that could be falling off. Oh, and by the way, shout out to the guys who jumped on our GameStop thing, man. Remember GameStop? We talked about that towards the end of the show. Those of you guys who stuck around. And, man, look at GameStop, man. Look at GameStop. Nice drop after we talked about it. Literally a day. It was one day, and then the next day it just fell out off the roof. Fell on its ass, man. Monster kill on that one for the short side of the trade. That was a great short. Yeah, that was a good one. That was a really, really good one. And, my problem is that we knew it was going to go lower, but I didn't suspect a drop that huge would happen. Obviously, I mean, look, that's a stock that's headed to OTC. It's a fundamentally flawed business at this point, where most gamers now are transitioning over to PC. And I'm not saying that people don't play console games anymore, but the market is. And I think was probably at its peak a couple years ago, but PC is just where it's at right now. PC games is just where it's at right now. Christiana, what do you mean TD doesn't allow you to do what? GameStop is the next blockbuster. I can see that. I can see that very much. Yes, absolutely. The business is fundamentally flawed. Here's another fundamentally flawed business, Foot Locker. Foot Locker is another. I've been talking Foot Locker for God knows how long. But I got impatient and I moved into Macy's, which, by the way, I reloaded yesterday. But Foot Locker, that's another fundamentally flawed business that we're going to be able to see a lot lower in the next coming months. Yeah. So these are legacy companies that are just, again, not structured for the future. They're not structured for the future. And not saying that they're They're brands that can't survive in the future in terms of their name quality. But when you have that many stores, and then people are buying shoes differently, and people are really kind of transitioning from that kind of like, oh, what name brand is this? It's got to be Nikes, or it's got to be this, or got to be that. I look at these younger kids, and if you go to school in the hood, they still got that name brand shit going on. But the white kids, they don't give a fuck. They really not on that shit right now, and really never have been. Really never have been. But again, just overall fundamentally flawed business for the future. MDLZ. Okay. Well, I don't understand what kind of food processing business. Mondelez. Okay. Yeah. Okay. These guys, Mondelez, I think they're like the canned fish company, right? They do sardines and shit. And dry foods. Again, this is one of those competitors that could just come in and eat a Beyond Meat alive if they want to. What's going on, Stock God? APPS. Ooh, look at you! Look at you bringing up APPS, boy. That's a throwback. I got to give you a round of applause for that one. Yeah, I done forgot about this play, man. This just took off on us. Remember, we were talking apps at like 89 cents, 99 cents. Here we have apps now at 464. I don't know if it's reverse split or not, but this company had always had it together, but for whatever reason, it just never was really clicking. And then I think people just kind of gave up on it, and I kind of gave up talking about it, because it just never seemed to really be able to break out of 150 or something like that. But good to see that company taking off, because they've got a viable business. App management is real. You got companies out here who don't know how to build apps, don't know how to manage their apps. So having to be able to hire a company that can build out an app for you, manage it, implementation, management, all of that in-house, that's a great business. That's a great business. Yeah. I said GameStop had a good day today. Yeah, you had some people pick it up off the floor, man. That's all. You had some people pick it up off the floor. Again, even a shitty company, right? On a good day when stocks are up, even a shitty company will go up. Even a shitty company will go up. But over time, the market always reveals the truth. Always reveals the truth. Here's Wells Fargo. Again, I've never been a fan. Never been a fan of Wells Fargo, because that's another company with some real shitty history. I'm not even gonna go into that, but that's another company besides just what they did to homeowners back in 08, 09. And then with the whole opening accounts, people didn't even know they had open. But this is just, again, another company that can't seem to get it together. And sure enough, will probably find themselves being acquired sooner than later. And as you can see here, inability to really kind of stay above that 60 RSI. What you see in companies that are doing very, very well is they can stay up there. They can stay up there. But as you can see here, Wells Fargo really doesn't have that ability. Great short if you can get it near, as you can see, the 60 RSI here. Right now, just trying to figure things out. So you might want to look for the failure here soon. But again, enjoying the last good couple days, right? I mean, obviously a rate cut would help them too. But again, as I said in my monologue, it's going to hurt all of these financial companies in the long run, as large companies and small companies over leverage themselves even more in a revenue decreasing environment and have no way to pay when they can't run away from the fact that we really are in a recession. See, when you get to zero, there's nowhere to run then. There's no way to run then. That's why so many people are running into gold. Yeah, and that's why so many people believe the government is really making a mistake here. They're really making a mistake here. All right, they only allow you to trade calls, not puts. Cristiano, what's your broker, bro? That they don't let you buy puts. Look, when you're applying for these brokerages, you gotta lie, man. You gotta lie and say, hey, yeah, I got 10 years of experience. I make 200 purchases a year. Max that shit out, man, because you gotta understand, when you give them the truth, they put you on some restricted type of bullshit, and then when you're ready to do it, right, ready to get to the next level, they make you go through a review, and in the review, they kind of want documents. They want you to, so you fuck yourself when you just don't, just come up and just say, hey, look, I know what I'm doing. Just tell them you know what they're doing, that you know what you're doing, That's the only way. That's the only reason why you could be restricted from doing that right now. INSY. Do I think it's a good short right now? No, they're better plays right now, man. If you mean short in terms of stock, I mean, you're below $2, right? So you're gonna have to put up significant amount of margin for a play like this. There's so many more shitty companies that are trading at much higher prices that you can take advantage of something like this, which, again, looks like popped on some news. It looks like popped on some news today. And I can almost guarantee you there probably wasn't even any shares available for something like this. These robots get in here, and they just take up every share available. And there's nothing left in here for you. If you only have $500, you only invest in OTC stocks. Hell no, dude. Hell no. Look, OTC is for when you have money and then you got some money you just really want to be able to risk. Beyond just, trading risk. Like, hey, if this money fucking disappears, it's okay with me. That's OTC at this point. That's OTC at this point. But if you only got $500, which I don't want to go into that kind of like beginner type of conversation. But if you have only $500, man, I'd get into some, either small caps on a NASDAQ, or I trade options, honestly. Personally, I trade options, particularly options between, $25 and $75. You might only be able to forward one or two contracts at a time, but you'd be able to leverage that small amount of capital so much better than trading OTCs. Yeah. USRM buying puts on banks. Okay. PES is a good short-term spike at 16 on the RSI. Let's take a look at that. Okay. Yeah, you got to be careful with these, sub $1 on these larger exchanges like the New York Stock Exchange, because you got to, find out, how many days left they have to be on the exchange. Because you got to understand that, these companies have already gotten their little warning about trading below the minimum price requirement for the exchange. So if you go in here thinking like, oh, okay, man, it's 34 cents, they're about to pop, and you don't know that today's the last day for them to stay on the exchange, or risk being delisted, you lose a significant amount of money. You can lose well over, 80% of your investment if you ride through a stock that gets delisted. Said you didn't see a delisting notice? That's good. If you didn't see one, check again. But if you didn't see one, that's a good sign then. But I'm sure they should have had one. Oh, no. Yeah. That's probably right. It looks like they just got below $1 here. Below $2 here. So, yeah, it's still pretty early for them. But there's some companies, again, that kind of strategy where guys go on FinViz and they just kind of look at whatever's dirt cheap and be like, oh, yeah, I'm going to buy that. Some of those companies have been below the New York Exchange minimum price requirement, which I want to say is $1 or $2, but I want to say it's $1 for a long time. But this stock really just got below $1. So, yeah, a pop could be very well imminent here. But it's also at the same time kind of risky because you got to understand that, when we talk about oil and in a situation where we're trying to get a rate cut, higher crude prices doesn't bode well. Doesn't bode well for a rate cut, right? Doesn't bode well for a rate cut because what justifies rate cuts is high oil prices. Or excuse me, what doesn't justify oil rate cuts is higher oil prices. All right. What's going on here is basically companies are seeing a possible decline in revenue. So we're having transportation companies that just aren't putting in orders for future supply. That's basically what's happening right now when we look at crude. All right. Yeah. Yeah, because to clarify what I was saying, and I'm just staring at the chart, you need to look and justify that there's no inflation being created in the market in order to get your cut. And to show that there's no inflation happening, crude has to be lower. It has to be lower. High crude prices, you don't get a rate cut because it just shows the economy is hot. It justifies that people are buying energy in order to take care of future needs. This showing is the complete opposite. They're not buying crude. Supply is increasing. So you can justify it. And that's why on Friday, look for a very, very bad number for jobs. They were, again, already said 180,000. They want lower than that. A horrible number would be so good. An absolutely horrible number. The worst case scenario is on Friday, you get a number like 225, 260. You get another 260 number, that's really bad. That's really bad. You get a number like this. Let me see if I can pull up that. Is that the one here? You get a number like this, which came out, what was that, May 3rd? This is unacceptable on Friday. This is unacceptable. News like that doesn't justify rate cuts. News like that doesn't justify rate cuts. So we're looking for a really, really bad number on Friday. Looking for a really bad number. That's way too good. That was a good number. And if you look at the May 3rd, we were just off our highs on May 3rd. If y'all could go back in time, throw every money at the 2800 call, 2800 puts on May 3rd. Hindsight is always 2020, but boy, what a number. What a number. And I'm saving that one. I'm saving that one because I'm going to, if we go into the recession, I want to frame I want to frame that one. I got that page bookmarked and everything. Cause I don't think we're gonna get there again. Can that new Apple computer make the stock go up? Not necessarily, because you got to remember the future now for Apple is service. They've made that very clear in their recent announcements. You know, they're moving to more service. Now, they're always going to release hardware, but they're now moving to becoming a service company, whether it be information management to streaming, right? They're also talking about getting into the gaming space. So they understand they're diversifying as well. What's got me a little nervous is they're not talking iPhone like they used to. iOS has got to update, but if you notice, they're putting more love into this whole iOS for the tablet that they got. But time will tell what the future looks like for Apple. Disney. A lot of people excited about the Disney streaming service. Again, that's another company that I'd love to see a little bit more news on. You know, in regards to that streaming platform that they're creating, which is going to be a monster hit with people, particularly if it's well priced. You know, when it comes to streaming services, people already have more than one. I know I do. I got Netflix. I got Stars. I got CBS All Access, and then Amazon. So I got a couple things. Most people have more than one streaming service because, you know, they do get boring after a while. You got to switch to something else. Excuse me. He said, bye-bye Netflix. Yeah, oh yeah, competition is good. Competition is good, and you know, and that's the right competition, right? I mean, two companies that have created two great products going head to head. Not, oh, well, this company's too good, so you got to break it apart. You know. Let me see here. Netflix, NFLX. Yeah, this is another company, too, just trading at huge valuation. I mean, you know, but they've got market power, and they've been trying to make inroads in terms of trying to find profitability by increasing. Because I remember when Netflix was like $11. Where's it at now? I think like 14. I got my stuff on auto pay, so but I think there's like 14 or something now. You know, but they're still coming up with good stuff that keeps them in the news and keeps people coming. And of course, they're doing really good with their international, services. You know, Netflix, and when you're in another country, Netflix looks completely different. Completely different. And you can see it if you're on like one of those VPNs that allow you to be like in another country, and you go to Netflix, it looks like, whoa, it doesn't even look like anything that we have here. Let's go on Three Hooks. Yeah, let's take a look at it. Honestly, the recession in the end of this year, we'll see. I think it's starting right now. I think we're in it right now. I think we're at the beginning stages of it. I think that May 3rd post I just posted was the top. You know, they talk about how the numbers are the very best the month before a recession. The numbers are the very best. FXI, the China ETF. China just is all over the place to me, so I don't know how to trade these kind of ETFs. You know, China's really just all over the map for me. And again, you can see it in the chart. I mean, this just has no pattern at all. I mean, this is what, 30 days, 15 days maybe. So you're really kind of in and out of this thing if you're talking about terms of really making money in and out. Otherwise, you're trying to go long here. You haven't really made anything. Over the course of what is this? Almost a year. If you're trying to go long FXI. I'd love to know what your case in FXI is, Gerardo, in terms of like, are you looking at this as a short or a long? Google looking for a move tomorrow. I agree with that. Yeah, I mean, I agree with that on Google. Definitely agree with that on Google and on Facebook. I think both of them are due for a nice pop. In fact, Facebook was one of those tickers that I was really hoping that we'd get come through on Black Box. But nothing delivered today. But I'm continuing to watch that because they're so beat up. Google nice, but it's just so expensive, man. You look at those Google options and it's just, dude, the capital required. It's just too much. And right now I've just been focusing on these kind of like 5 to 10, as my comfortable size. And, that's the size that just doesn't make me sweat. And you look at Google, you look at Amazon, and you got to put up like 15 or 20 just to get $1,000 or $2,000 a day. You sweating bullets, man. If Blockbuster partners off with Netflix, if Blockbuster partners off with Netflix, will be $1 billion company. Well, you got to remember that I believe Netflix tried to offer Blockbuster, I think, themselves in a sale, and Blockbuster declined or something like that. There's some history behind that. I don't know exactly how it was. You're gonna have to Google that, but there was history behind that, Jeff. New wave of YouTube censorship. World War II German music is now banned. We should stop the communist force. Well, you got to understand, YouTube is not necessarily censorship. People forget that this is like a private business. When you're on YouTube, it's like you're in somebody's home. You don't have to be in here. You really don't have to be here. There are other streaming companies that you can be on. And if you're in somebody's house, you got to be in their house the way they want to. Particularly if that house, right, is dependent on other people, right? That person's got a job and all that stuff. They don't want to see you in their house acting crazy. All right? Talking crazy. All right, Google's got advertisers. Advertisers who have quote unquote family friendly companies, right? So they don't want to. So if I'm Disney, if I'm Verizon, if I'm Johnson and Johnson, I don't want to put my money on a platform that's got guys who are like, yeah, let's go kill all these LGBT people. Yeah. What about this Third Reich, yo? Hitler rise again. Come on, man. Like, let's wake up here. That's just common sense, man. That's just common sense. All the people getting banned are just people who are just talking reckless. Just all kind of like shit that's just not good for in terms of a public image. Stuff that just, like, do we really, what kind of value does this bring to the public discourse? Look at what some of those guys who got banned were saying, man. They weren't really bringing anything of some use to the public. MAGA Zog, you were talking about them banning World War II Nazi music. Like, what value does that have to our society today if it's not being presented in a form of education? Like, okay, this is why they were singing it, or you know what I mean? But if you've got it as like your theme song, yeah, you gotta go. You gotta go. I'm not trying to lose $100 million from Disney because you want to pretend like you in 1935, man. You gotta go. Yeah, you gotta go. Fucking up my paper, man. You fucking up my paper. OSTK. Overstock.com. Yeah, this was another company, man. This Overstock.com was the Wayfair of 2018. That's basically what Overstock.com was. Basically the same business, right? I mean, Overstock was more or less like as they said, Overstock. They bought things and you ordered, but Wayfair is basically the same. And I'm looking at Wayfair the same way. I think Wayfair could very well be the next Overstock, and that's why I'm so excited about our upcoming recession, because I think Wayfair could be the very same thing. Said Google is banning half of Americans from fish is going to cause a civil war. Why would it cause a civil war? Come on, man. Let me see here. AMD. Let me see here. He says history. What's wrong with history? It's not. It's not about history. If you want to, you build your own website and then put out all the history you want. You can go build your own website, your own streaming, and put out all the. But if you're again in somebody else's house, which is a privately owned company, you got to do what they say. See, that's what I don't understand. You want to spit free markets and freedom of speech, but now all of a sudden this private company can't do what they want, what they want to do. You can't have it both ways, man. See, that's what I'm saying. This country want to make up rules all of a sudden when things don't go your way. You're free to create your own website and spew all kind of Nazi everything, but not on YouTube, man. Again, on YouTube, you fucking up their money. You fucking up my money when you put shit like that on there. Right? Because Disney pulled back and we all lose. Alcoa. Yeah, Alcoa's been getting a beating. Shit. But you got to understand that Alcoa, interestingly enough, although they've got mining businesses, they've got some other businesses here too as well. And obviously, I mean, aluminum and all that, what they do. I believe they're in the aluminum business. And they also have significant exposure to China as well. So there's some other things going on there when we talk about Alcoa. But definitely not a business that I've looked at or done any real research in. Yeah, man. Paychecks. God damn. Shit. Yeah, Paychecks doing shit, bringing in that money, man. Look at that. Look at Paychecks, dude. That's boy. You want to talk about a ride? Look at that, man. So something obviously is going good here. Again, their major competitor, ADP. And ADP, I don't think is doing as good as them. Are they? Oh, I guess they are doing as good as them. Guess they are doing as good as them. I gotta look more into these businesses and see how. But I do know ADP is definitely a lot more diversified because they also do a lot of IT work as well. But that's basically their major competitor, ADP and then Paychex. They kind of compete against each other. Oh, you sell coal to Alcoa? Okay. Yeah, Kelly Rob, I agree with you, man. These dudes are just clowning, man. You know, that's that Alex Jones bullshit. You know, I used to fuck with Alex Jones when he was talking about aliens. Alex Jones would still be on YouTube right now if he was just talking about aliens and the Illuminati. If he would just stuck with aliens and the Illuminati, he'd be all right. He was making money. He was more popular. Then he started, I don't know what happened to him, man. Just, people started drinking that Trump juice and, 1776 will rise again. He fucked it up. He fucked it up, man. And what's sad is that he can't go back. He can't go back now. He's built an entire audience off the bullshit. Now he can't go back. But if he would have stuck with aliens and the Illuminati, he'd be making more money now than he ever was. Oh, no doubt about it. He'd be making hella bread right now. If he had got his editing right, you know what I'm saying? Which he probably would have figured out how to do that and put out some really good content with that shit. Oh, whoo. He would have been making hella bread, man. Yes, indeed. But now, he's got to sell vitamins and shit like that. You done fucked up your image, dude. Have you seen his website now? He's got to sell vitamins. Nigga talking about drink my brain broth or whatever the fuck that is. Fuck out of here, man. Joe Rogan, he got sued and all that shit, man. What's your opinion on the AMD short term? Well, look, I really like what AMD is doing with their new Ryzen processors, and because you remember they got caught up in that whole Bitcoin thing, and they tried to survive off that, and they couldn't figure it out, right? I mean, but Bitcoin was kind of what they needed to kind of keep their head over water, and it worked for the time being. But now with the latest processors they put out and GPUs that they put out, they had a recent conference where they put out way more. What's the word for innovations in regards to their GPUs? I watched a little bit of that, so they're looking to put their best foot forward, man. They're looking to put their best foot forward, so I'm really excited about AMD for the long term. But again, if the market turns sour, you need to understand that even the best companies will have valuations cut. Will have valuations cut. So enjoy it for what it is right now. I mean, at the end of the day, they're still trading 115 times earnings right now. So AMD is not cheap. Although a lot of people are like, well, why can't it be at the same price as Nvidia? But it's not cheap where it is. This is a company that did a lot of splits way back when. That did quite a few splits way back when, and that's kind of why they trade at the price they do now, unlike Nvidia. But for the time being, it's hot, man. It's hot right now. Yeah, T. Kelly is ridiculous, man. Brain broth. Fuck out of here, man. But that's really a sad American story because that again Alex Jones had built himself uh, into really a star doing stuff that people were really interested in, man, and would have really positioned him to win long term. When you get into that space, and you get niche like that, particularly against what mainstream America believes in most of the time, it's going to hurt your pockets, man. It's going to hurt your pockets. Pred, look, I feel like at this point, shout out to Ken, man, because Ken got me into Pred at like $1.85, man. And we talked Pred. I've got so many videos on Pred. At this point, I just don't want. I feel like if you don't believe it, it is what it is, man. I mean, I don't want to keep talking how great this company is and how great it is and how great it is and how great it is, because I don't want to alienate my audience, because people going to trade other things. But this thing is going, man. They're not playing around with it. They're not playing around with it at all. Yeah, HM. We'll see. We'll see what's happening to it. But again, here's another one, right? Using that 40. Actually, this is the 50, but staying above the 40 RSI. That bullishness kind of keeps you up there. It doesn't come down. And if it does, it doesn't stay down. What is Shop Business all about? Well, Shop, which by the way, I'm on Shopify. I built up the traderslibrary.com, which basically I've arranged to sell out of print finance books, because the thing about finance books is that, for the most part, the terms and the game doesn't change, right? I mean, you can read books from the 1970s about trading, and they're just as applicable today as they were back then in terms of a lot of the things they talk about. So check out my website, thetraderslibrary.com, and all of them are out of print. I sell them dirt cheap. The publishers barely want any money for most of them in terms of like revenue share, so I can sell them really, really dirt cheap. The site alone generates maybe, I'd say, I'm probably on target. It's actually the first month I'm probably on target to hit maybe $1,500 for the site. But it's just one of those things where I kind of want to get my feet wet when it comes to e-commerce and a buy to sell. Me on taking responsibility from A, B to C instead of doing an affiliate thing where somebody else takes care of it. I kind of wanted to have my own thing for once. But Shopify is a company that allows you to do that. They allow you to be a business owner to the world for, like $26 a month or whatever it is for their entry level plan. You can put in as many items to sell as you want. You can build out the website in less than 10 minutes, really. You can buy the domain name from them. I mean, I love Shopify. Love Shopify. And, this is another company that, again, kind of up there. It could definitely be trading at a much cheaper price. But what they offer is incredibly beneficial to people. But that valuation is insane, man. That valuation is insane. Will coal survive a recession? I don't think coal is going to survive as a viable source of energy. When you talk about coal in general, I can see us not using that in the future. So forget about coal surviving a recession. I actually think it's not going to be, viable source of energy in the future. Yeah. So Ken got you into prayer, and he got him into Fuse, which is now known as what? Verb, right? Yeah. What's going on, Jeff, the Me Marine? AMD options gave me so much leverage this week. Yeah, AMD options are not. I mean, they're yeah. Again, when I talk, somebody was talking about how to trade with $500. AMD is a great stock to trade if that's all the kind of money you got. Very liquid options, very liquid stock in general. Options are very affordable. We're talking about a lot of plays, but for most people, you focus on 3, 4, or maybe 5 companies and let them, and get to know them. Have them be your best friends. Know those companies in and out and how they trade in and out, and then just focus on that. I mean, if that's especially if you're not the type to want to do the algo thing. IDN IntelliCheck. I don't know anything about this company. But boy, that volume leaves a lot to be desired. 100,000 shares traded. Average volume is 80,000. Yeah, I mean, penny stock, only $5, but nice run, at least over the last month. Definitely needs a little bit more volume there. But Jeff, I mean, yeah, that's been a move, bro. I mean, well over 100% gained, and unless if you're buying less than 10,000 shares, I guess it doesn't matter. But nice move on IDN. Yes, appreciate you, David. Thank you, man. Trying to be consistent again with it. I like this. I like the idea of a Sunday Wednesday schedule. I had to watch the NBA finals yesterday, but I like the idea of this like a Sunday Wednesday schedule. Really, really good. And also, I also got tired of watching other guys. They're just not interesting, and then they're not really giving me what I needed, in terms of like being really diverse with the kind of plays they talk about. BA. This is really interesting stock because I'm looking at BA on this higher low, and I saw this earlier today. The stock moved today. Obviously, I think there's still some risk here. They spent a lot of money on that plane, the MAX 8. They're taking a huge loss on it. For the most part, I don't think it'll ever be able to come back into service. I don't think the American people will stand for it. I don't think Asia will stand for it if it comes back into service. But I wonder if the damage has been done at a company like Boeing. So that higher low on that RSI that was developed there on that second leg up. It's very interesting here. So I'm looking to see what Boeing is going to do over the next couple days. This is another stock that not the cheapest, right? $350. Those options aren't super cheap as well. But if that thing hits the wall, boy, that's a lot of money coming down here. That's a lot of money that could be made here. Whew, that's a lot of money. That's a whole lot of money. This stock is going up nearly $100, actually $200 a share, nearly $200 a share since July of 2017. $200 a share since July of 2017. There's no reason that Boeing can't give some of that back, maybe 50% of that back. So the upside is to the downside in terms of Boeing. So hell, I'm looking for it. Definitely looking for what could happen here on Boeing in the future. So I'm watching the news here as that is a potential opportunity there for Boeing. But again, very lucrative business. I mean, they're in military, they've got aerospace, they're in a whole lot of things that can rescue them. But they lost a lot of money on that plane. They got some lawsuits that they still gonna have to take care of it because of the losses on that plane. So still a lot of risk on the table for that company. It's going to be interesting to see how that plays out. And they've got a lot of exposure to Asia as well in terms of their military and all that. So if China starts cutting back orders and doing all kind of things like that for their planes. Gave half of it back today on the AMD short. Okay. Yes, indeed. What's up, Juan Diaz? Third of the coal we mine here goes to energy here. Other 2/3 goes to steel and shipped overseas. Okay. That's what's up, man. What's going on, Lord Yase? I didn't even see your quote, bro. I didn't even see that. Bitcoin is fun. Yeah, Bitcoin. Look, Bitcoin was doing its thing right now. I think it's still cooling off a little bit, right? Bitcoin was doing its thing, but it's cooling off here a little bit. Just cooling off a little bit. No problem. Yeah, no problem with that. Trying to hold on to the 7,500. Trying to hold on to 7,500. All right. What other tickers you guys are looking at before we wrap it up? Again, some of the inverse plays took a real hard left today. One of them was QID. Here's QID, which is the inverse of QQQ. Not as leveraged as SQQQ, which is triple leveraged. All right. That's why these leveraged ETFs, you really got to get out of it when you think they're topping out, because they can pull back so hard. But only 1.4% today in QID. But again, looking at the futures, we're set to open up a little higher tomorrow, so these could again adjust lower as well. But interesting look into all of these plays. Here's QQQ. Here's another one as well. Again, I'm going to be looking for the rejection over at the 60 RSI eventually, particularly as we get closer to that RSI level. Hopefully, getting a really bad day on Friday. I know they need it. I know they need it, so I hope they get it delivered. Juan Diaz, no, I'm using Interactive Brokers. I stopped using TD a long time ago. I stopped using it. Not because anything was wrong with them. It's just I just wanted to get fancy and use Interactive Brokers. That's all. TD is a great broker. FAZ, FAZ is the financials. FAZ is the financials. That's an interesting play right there. FAZ, which is a bear financial ETF. Again, just got to be careful with them. Again, this is a triple leveraged bear ETF, which will do very well in time, man. This is going to do very, very well in time, but just not yet. Right now the financials are going to be the biggest short-term beneficiaries of an interest rate cut. Remember, so cheap money is good for them because the people they've loaned money to can continue to borrow and pay back what they already have for now. But we know what the future looks like, or at least what the data that's coming in is pointing to, things that are not so good. Yeah, we talked Tesla. Let me take a look here. We talked Tesla. But, David, what does the VIX look like to you, man? Obviously, that's going to continue to cool off here, at least for the short term. VNQ, Vanguard Index Real Estate. I like IYR better, but they're both as liquid. I mean, they're both pretty liquid. VNQ is a real estate one. That's again, all of these real estate plays, they're showing some really interesting divergence here. Here's another one, right? I mean, obviously cooling, fighting for its life. I mean, it's really fighting for its life over the last 2 months. So look for this again. That 60, here's that 60 is trying. All right, really, really trying to stay, that 60, it's got to break out of that. It's got to break out of that. And again, with the cut, it will break, but can it stay above that level? Can it stay above that level? You know, but IYR is another one that's good to trade. All right, and then you also have VOO, I believe. Is it VOO? Yeah, VOO. VOO is more expensive. Damn, I didn't think it was that more expensive, but IYR is kind of one I've liked in the past. But yeah, VNQ is another one too. Even with the jobs report, that's the thing though, Jeff. I mean, if the number is going to be really bad, I don't know how the market's going to react because they need a bad number. The number can't be good. Because if the number's good, then that means you don't get the cut in June. It's hard. I don't see how they justify it in June if the number shows that the economy is strong. Right? Because if you got a number that shows the economy is strong, now it's like, oh, okay, you're just doing it because the stock market is going down. It's kind of hard to sell that. It's hard to sell that to the American people. All right. But yeah, if the number comes in and we got a number like 145,000 jobs added, that's horrible for a country as mature and developed as ours. But how does the market trade that day? I don't know. Jeff, you said you can't see the Fed cutting. They got to, man. We're running right now over the last 4 days because of a cut, because of the promise or the talk of one. That's the only reason why we're bouncing here, Jeff. We're not bouncing because the China situation got better. We're not bouncing because there was any data to come out to show that things are better globally. We're bouncing because people expect a rate cut. And they're trying to get in front of the move. That's the only reason why we're doing what we're doing right now. Otherwise, we'd still be selling big red turd bars going straight down. And that's exactly what will happen if they don't get the cut. That's exactly what's going to happen if they don't get the cut. You know. But personally, I want them to get it. It's only going to make me, as someone who's biased to the short side, more money. Look, I'm not against us going back, back to those. I don't want to get back to all-time highs. I don't want to get back to May 2nd. But I don't, I don't mind if we got close. You want to go back up there? I'm with it. Maybe 290. I'm cool with that. 292. But damn, I don't want to set no new records. I'm not that evil. Not that evil. And who never said they were thinking about cutting? That's all they're talking about. That's all they're talking about. They're begging for it. Do you watch investment television? The traders are begging for it. Let me show you something here. Let me see. Hopefully this doesn't load up to. This is Tony Dwyer here. Let me see if I can. Let me see. Can I cut and paste this? They're begging for a rate cut, man. Every trader's coming on TV begging for it. You know, you can go watch the video. I'll probably have it for the next show on Sunday, depending on what happens in the news. But this is quote unquote hotshot trader Tony Dwyer. You know, begging for it. CNBC, every damn article on CNBC lately talking about it. They're hinting at it. The White House has been hinting at it. I'm trying to find a article here from the White House. Let me see here. Yeah, there it goes. Here's the Wall Street Journal. Here's the Wall Street Journal. This is a really good one from the Wall Street Journal. This was today. This was today. Just a couple hours ago. We'll upload one more. No, the Fed is saying it. It's not the public. The Federal Reserve is saying it. Here's another one. You go right on the economy page. It's literally right on the economy page here for the Wall Street Journal. Fed begins debate on whether to cut rate as soon as June. They're talking about it. So this is not me making it up. This is not me saying it's not going to happen or what. This is in the financial media. I'm sorry you guys don't stay on top of it as much as I do. But if you don't watch business media, you don't know what's going on. And this is literally every other conversation on CNBC right now. Every other conversation on CNBC right now. You know? Every other conversation. Absolutely. So it's coming out. It's coming out. And I think they're going to get it. I honestly do think they're going to get it. And, you know, so I'm looking forward to seeing how the market is going to respond. Again, just go to Google, type in Powell rate cut. Go type in Powell rate cut. He's already made statements on it. I'm not going to copy and paste every single post, but we'll see what happens. We can't predict his moves, but I can predict that the people who have the power need it and will get it. Yes, indeed. Jeff, you said they will leave rates as is. Well, if they leave rates as is, then get ready for some lower prices. But as I said, I believe they're going to get lower anyway. All right. Yes, indeed. Enron is... Elon Musk is the new Enron. Is that basically what you're saying, Callie Rob? I don't know. I think he's just maxed himself out. I don't think he was ever a scam. I think he had a real viable product. I've actually been inside of a Tesla. Man, they are a dream to ride in. They're a dream to ride in. You can't hear shit. You close the door, it sounds like you're in heaven, man. You can't hear anything outside when that door shuts. They feel well made, you know, but I think he just doesn't have a viable business model. You know, he had to build out a lot, the locations, everything like that. Maybe if it was like a brand underneath an established brand, then we'd be having a different conversation. We'd be having a different conversation. Yeah, exactly, Cali Rob. Good car, bad company, right? Yeah, I agree with that. Good car, bad company. Would I buy a house now or wait? It just depends on your price, man. It depends on the price. Are you getting a deal for your area, and for the house that you're buying? Is it a deal? Is it a deal? But yeah, I mean, you can always wait, right? You can always wait to see how things shake out. You can always wait to see how things shake out. Yeah, I'm looking forward to it, man. I'm really looking forward to what the next couple of days hold. I mean, we've had some really, really exciting 2 weeks in trading. And I've always said that red days and volatility is always more exciting than what we were having going on here. That's why it just was so hard to do a show, at the beginning of the year. It's like, what the fuck is this? Like, what is that, man? You know what I mean? Volatility is exciting. It's a much more competitive, much more insightful when you have to find a reason behind moves. I love volatility. Yes, David. Don't you love volatility? I love it. Market down 250 points. Yes. I love it. Absolutely. Remember, SpaceX is a game changer. Hilarious. Yeah, he doesn't talk about that SpaceX no more, man. He doesn't talk about that SpaceX no more. It's too expensive, man. What's going on, Bats? About to wrap things up here, but yeah, that project is too expensive. Tesla had no chance for the same reason no competition to Google or PayPal exists. Parts of the economy are monopolies. What part of the economy is a monopoly, MAGA? So I don't see any monopolies here. And don't tell me Facebook and all of them are monopolies, man, because we got a lot of competitors out here when we talk about social media. They just do it right. This is not like the 1980s when we were AT&T and that was a monopoly, right? I mean, you couldn't get anything off the ground in terms of a communications company to compete against AT&T. But like now, it's like if you got a product and people like it, particularly a tech product, you can make some damage out here, man. You can make some damage out here. And when we think about the Instagrams of the world, the YouTubes of the world, those are all individual companies that were bought by Google. It's not like Google came up with them. Google was a publicly traded company, saw a business coming up, they liked it, and they acquired it. You ever heard of the Quoth the Raven podcast? I'll definitely check it out. Quote the Raven podcast. Yeah, I'll check it out. Said waste management is a monopoly. That's hilarious. It's so funny because they do have little competitors, little regional competitors to waste management. But waste management has, I'll probably say because every state I've lived in had waste management, but they built out the facilities necessary to do the job. But there's some regional players in the waste game too. There was an OTC stock that we pumped years and years ago now. That was like a waste management company. The company had like 2 fucking trucks and like a contract in some podunk city in Alabama. That was hilarious. Toyota electric cars could give Tesla a run for their money. They wanted to, but no cost effective. Yeah, yeah. Had Waste Management for years, done well. Yeah, Waste Management is just one of those companies that delivers, man. I mean, a lot of cities pay them a lot of money. Also, they've got contracts with private communities, to dump trash, individual apartment complexes, all type of things. So Waste Management, they do the job, man. And I know they pay a good dividend too, right, Jeff? They pay a dividend? I do believe they're a dividend-paying stock as well. If I'm correct, I do believe they are a dividend-paying stock as well. So, that's a real business through and through. Saying the trucking industry is monopolized. I don't know too much about the trucking industry. Yes, okay, they do. All right, yeah. That's one of the great American companies, Waste Management. I just remember they were on Undercover Boss a couple years ago. That was hilarious. And that show, Undercover Boss, I had a love and hate relationship with that show. I think they still make it, but the episodes seem to be infrequent. But I always felt like the bosses could have given a lot more money. You know what I mean? Because I'd look up the company. I'm like, okay, that company made $2 billion, net profit that year. And then they give like, you know what? You were so good on that job today. I just want to let you know you're a valuable piece of this company. What you do is really invaluable to what we do here as an organization. I'm going to give you $1,000 to your dream. Oh my God! Oh my God! Oh my God! Nobody's ever given me any kind of money like that before. Thank you so much. Thank you. Oh, I'm like, $1,000? Dude, are you serious? But that's the kind of money they were giving these people. Like, that's like 5,000, 15,000. Maybe if they're lucky, sometimes they would get like 50, or they'll be like, I'll pay for your college, right? But I'm like, dude, this company made billions, and that's all you fucking giving, dude? Come on, man. Like, are you serious? If you watch the show, you know what I'm talking about, but it's hilarious, man. Hilarious. Let me see here. Yes, indeed. Shout out to Bats, man. Thank you for those tickers in gold. I completely forgot about the AUs and AUYs of the world. And these will come in handy. These will come in handy very shortly. They've been monsters over there, but they're cooling off now. But we'll see what happens shortly. You know what? I forgot to put. I had noticed that early when I started the show. I forgot to put the call-in number and shit. But I mean, I'll make sure for Sunday's episode to put in the call number and shit. Cause my call-in number is even different now. Cause Skype was on that bullshit with the dialer. I forgot to start the show with the call-in number and all that. RSG is the other trash company. Okay. RSG. Yes, Republic Services. How did I forget? Yeah, Republic Services. Yeah, I forgot about that. Yeah, Republic Services is the other one. Yeah. Good call. Good call on that. Yeah, I mean, people still need, ways to throw away their garbage. And, interesting enough, you still got some municipalities that have their own trash. For example, the city of New York, right? I think the city of New York they still have their own trash organization, if I'm correct. But New York City has their own trash service. Man, that brings up some memories too, because I've told you guys about how I went to New York and got desperate and was looking for all kind of jobs out there. And I went to this center where they were telling me about, find this job. They wanted me to take all kind of tests. Oh, take a test. You can take a test to be a firefighter. You can take a test to be a conductor. You can take a test to do that. And I think there's a test for sanitation. There's a test for the sanitation. Yeah. A lot of stocks we talked about today, ladies and gentlemen. I appreciate you guys joining me as we talked about all of them. Look, the market's still very, very interesting here. Still very, very interesting here. We could continue to go lower. Or, ladies and gentlemen, we're back up to all-time highs again. Whatever happens, let your moving average guide you. Whatever happens. But continue to play the best of the best and short the rest. Victor, here's V. Still looking good. This is one of my meat and potatoes. I think this owes America so much money back. Yes, indeed. Why, somebody want to call in to close it up? We'll wrap it up with one call if somebody wants to call in. I've already kept people up for 2 hours. But I will be back Sunday night to talk about what the week looks ahead as we get that number on Friday. It's going to be really interesting to see what that number is going to look like on Friday. Same day expiration lotto plays, IWM SPY, Tesla. Okay. IWS SPY, Tesla. Okay. Well, today's Friday. Like I said, that job numbers comes out in a couple hours. Hold on here. Let me get the exact time. Let me get the... Because I know it comes out tomorrow. Weekly government payroll, 8:30. So tomorrow, 8:30. Tomorrow, 8:30, we'll get the job number. Again, it's got to be bad. It's got to be bad. We'll see. We'll see. That's all we can say. That's all we can say. Bats, IWM, June 6th, 150 call. Okay, you guys want to go it up? Okay. Hey, playing the long side. I can't make up my mind, man. I can't make up my mind. If you believe in the rate cut, which I do, that means the numbers got to be bad. The number's good. If the number's good, then no rate cut. And now you got to tell me why we keep going higher. What do you think about his play, though, Bats? That Thanites guy. June 7th for 2019 for the 150 call on IWM, which is basically the Russell for the 150 in the money call. All right. AMD is a buy. Going to see new highs. Blue sky breakout. You watch. Yeah, we'll look at it, Big Zini. I said I liked it. I really like AMD and what they've been doing lately. I like what they're doing lately. But we still have to consider what the macro position looks like. Yeah, I mean, Bats is saying these are lotto plays. I mean, these are basically like he's just throwing it out there. When we say lotto plays here, we mean that, hey, this is money we can risk and lose it all, and it's okay. In the money. Same day. Expiration. Tomorrow. Yes, I agree, Big Zini. Hold on, somebody's calling my... God damn, I didn't know my Skype was signed in, but I didn't give you my line 2 number. Bats, what's going on, man?
Thanks, Alan. How's it going?
Good. Let me give you a little cheer here. I appreciate you coming on to the show, man. Really do. With that being said, how's everything?
Yeah, everything's good. I just wanted to pick your brain on the market as a whole.
Okay.
Obviously, I've been trading the SPY and IWM, been trading those options since April of last year. So, I think I have a strategy that works. Well, I don't think I know I have a strategy that works in terms of trading those. And I just wanted to pick your brain on a few things, just about where you feel the market is going. The first question I have for you is that, in the long term, like let's say in the next month or 2 or 3 or the next 6 months, are you typically short? It sounds like you're short on the market, at least in the near short term or near long term.
Yeah, I mean, right now I'm actually a bit hesitant because I really want this Fed talk to go either away or for them to go and implement what the hell they want to do. So I'm really indecisive about the short term. Now, the long term, I still think that the global economy and, of course, the economy in America is going to hell in a handbasket. But in the short term, meaning 30 to 60 days, I would really love to see some kind of definite idea of action that the Federal Reserve is going to either take the position that a rate cut will be implemented, or the fact that they're not going to do anything. And tomorrow morning will be a great way for them to, a segue into either that conversation or away from that conversation.
Do you typically play Fridays in a certain way? I mean, I know a lot of options expire on Friday. Do you typically see Friday as a day of sell-offs for people closing out their positions? Just wanted to find out from you, how do you typically play Fridays? Because what I've seen, at least with the SPY, is Friday is an extremely erratic day for the SPY. So what it'll typically do is it'll either rally and continue rallying, or it'll sell off the whole day. And I actually, call it Freaky Friday, because having studied the SPY over the last year and some change, Fridays are always weird.
Yes.
And maybe that's because people are closing out their options. Maybe because a lot of economic news comes out on,
Absolutely.
Fridays and also Mondays. So I don't know. What are your thoughts on that?
Yeah, I mean, I'm full agreement with you. Friday, and this White House loves to release news on Friday. They love to have something to talk about over the weekend with the news agencies. So Friday has always been, when I've noticed is that when we are selling through the week, Friday tends to be the day that they get saved by a really great news drop or a tweet or something like that. Right. So now we're really right. We've had 2 horrible days and now 3 good days. So how do we go into Friday? Again, with a jobs number that is weak or a jobs number that's good. So I don't know what tomorrow looks like. I'm really unsure of what tomorrow is going to be. There's no sign of it. We haven't had a good Trump tweet about the economy. We haven't had any sign from Powell about what he wants to do moving forward, although he's hinted at it. So it's all over the place right now. What's your bet? I hear that you want to go long.
Yeah, well, whoever said that, it depends on where the SPY is and what time of the day the SPY is at. What I found is in my year of studying the SPY is the two questions: are you swing trading it? Are you day trading it? If you're day trading it, you need to know what time of day it is, or determine the time of day, see where it is. I have a number of strategies, and I won't get into too much of that right now. But just analyze the trade. Let me point to weaknesses in my trades, in my trading. I tend to not do as well when the market trends in one direction intraday. So let's say the SPY opens and it starts continuing to go up. I don't normally trade very well when it's in one direction, or if it's, selling off. What I tend to do well on is if it hits a high, comes down to a low, kind of, testing, double tops, double bottoms, triple tops, triple bottoms, that type of thing. So I already know where my weaknesses are on trading. Friday used to be a bad day for me in terms of trading, because that's when the market, it just tends to trend in one direction. But what I can tell you for swing trading, especially overnight swing trading, and those of you who are on my Discord room and have been trading with me, I have a strategy that works. I would say 90% of the time you can make a profit on the SPY or IWM if you're overnight swing trading, and it's based off of the principle of mean reversion, RSI overbought, RSI oversold. And if you follow this one strategy, that I've looked at and studied, both with back testing and both, real trading, if you're able to catch the SPY or IWM at the high of the day and get in as close to the high of day as possible, you then simply buy puts at the high of day, you buy calls at the low of day, and swing it into the next day. And I would say pick an expiration date of about a week or 2 weeks out, just to give you some wiggle room. But technically speaking, you can go out have an expiration of the next day, which won't allow you wiggle room if there's theta decay on those options. But I would say go out at least a week or 2 weeks if you want to be more conservative, and then you can either go at the money or slightly go like $1 or so out of the money. And when you go out of the money, make sure that that's a price that's been hit on that same day. So let's say IWM, you're starting, it opens at 146. Let's say it goes to 149. It hits a high of 149. You know that you can possibly get in at the high of day at the money conservatively at 149 with a week's expiration, so the following Friday, or 2 weeks out if you want to allow yourself wiggle room, or if you want to be a little less conservative and riskier. Instead of 149, you can go $1 out, which is like 148 or 147. But this is the key. Whatever strike price you're picking, especially when you go out of the money, make sure that that price was tested within that same day. Does that make sense?
Yes, it does. It does. Now, okay, so that way, all right, because I was going to ask you, how do you know you're picking the high? So you're basically saying because now I'm thinking it's like a double top strategy, right? So it's got to have already set a high, and now you're going back and taking the position at the high.
Correct.
Okay.
And so a double top, if you're lucky, yes, because that means it tests the high, came back down, it's retesting that high, and you're going in. Sometimes you're not that lucky. So people will say to me, well, how do you know? It's all well and good if you can catch the high of day or low of day, but how do you know? Look at the last 2 days of the SPY where it closed on the high of day. Today it didn't quite do it. I'm not too sure, but yesterday it did that. The day before it did that. It literally, as the close came, it went to a new high.
Right.
And all you have to do with that is then when it closes at a new high, if you're able to time that carefully within, 50 cents, I would say 50 cents of the high or within 50 cents of the low, you will be okay. Because then what tends to happen, especially on a day when it either sells off savagely or it severely rallies for that day and it's overstretched. Think of a rubber band stretching it between the floor and the ceiling. When you stretch a rubber band out, it can't stay in that state. It will either snap or either wants to tend to come back in the middle. And you know what that middle is for day traders? It's VWAP. Mm-hmm. If you look at VWAP intraday and you put like a Fibonacci between the highest and the lowest values, that VWAP level tends to trend towards the 50% retracement. And so all you're doing is looking for the highest and lowest positions where it's stretched. The only place or time when this strategy doesn't work is when you get gap ups or gap downs. But I've taken a year, 10 years worth of SPY data, of IWM data, and what I figured out is if choosing between IWM, which is the Russell 2000, or the SPY, IWM gives you a higher success rate. And also because it's a cheaper stock and moves more relatively, so you take the price of IWM and divide that by ATR, or average true range, you get a value that's a lot lower than the SPY. The SPY typically, I think right now is about 3.5 or somewhere up there. And then for IWM, it's typically $2.50. But there was a time earlier, maybe a month or two ago, where the IWM was actually, as a cheaper ETF or cheaper ticker, was almost moving as much as the SPY. But I would say for technical traders, if you want a cleaner chart, you go with the Russell 2000. And for a higher success rate, okay, so let me spit out these statistics because I've looked at this extensively, and then and then I can leave. If you go in with low of day calls on the SPY, you have a 95% success rate of making money the next day. Now, I'm not telling you how much money you could make the next day.
Sure.
All I'm saying is the probability of being above break even going in at the low of day with the SPY is a 95% success rate. And that's taken from a year's worth of data. Gotcha. Or 250 or 252 data points. And everyone can test this for themselves. I've done this extensively. Low of day calls on the SPY, you get in and then you simply swing trade it into the next day. So this strategy, you don't even have to have a knowledge of technical analysis, because all you're doing is this near the low of day? If it is, you're getting in and trading the reversal. Mm-hmm. So you buy calls at the low of day, 95%. With the Russell 2000 compared with the SPY, it's something ridiculous, like a 99.4% success rate. So, I've had, trolls and people who've been arguing with me against this and say, well, it didn't work on this day. trading is not, we're not trying to trade and preempt what's happening in the next trade. It's almost like you flip a coin. Right. If you flip a coin twice, maybe your success rate isn't high. What we're wanting to do is to have an edge or a win rate over a long period of time. Mm-hmm. So where traders fail is that they will wager half of their account, 100% of their account in maybe 3 trades. They blow up their account and they say the strategy doesn't work. That's the biggest mistake a lot of traders make. So what you need to do is to be able to put at least 20, 25, 30 trades back to back to actually tell you whether you have an edge in your strategy. You can't be like, okay, let me trade today, I lost today, trade tomorrow, I lost tomorrow in 2 trades, and using those 2 data points and saying that the strategy doesn't work, because most traders will then say, okay, this doesn't work, let me move to moving averages, or let me move to RSI, or let me use Batz's method or Sal's method after 1 or 2 trades. What you're trying to do is repeatedly over a long period of time show a success rate. And I've actually done this both with back testing and both trading with real money to show that this works. Everyone on my Discord room knows the strategy. And in fact, I told them last week that I should quit the Discord because they all know what the strategy is. And that's a swing trading strategy where you're strictly going from, one day into the next day, and that's it. So IWM performs much better than the SPY, a 4 to 5% higher success rate, and we're already talking about above 90% for this. So out of 250 trades, if you were to do this every day and just did what I'm talking about, which is get in at the low and buy calls, get in at the high of day and buy puts, out of 250 trades, only 25 trades or less will result in a loss. And so this is what I've been trying to tell everyone, that trading a lot of the times is a lot about probability, a lot about mathematics and probabilities. And so that's the calls. On the put side, so generally puts are less likely to result in success. It's a 5% lower. So for the SPY, instead of being 95% for the, low of day calls, trading for the reversal, on the put side, it's like 90%, which is still high. I mean, anyone would take those odds, but the puts tend to perform less, both for the SPY and IWM, 95% on the SPY, and then 90% on the SPY and 95 on IWM. But the gist of this is, if I had to choose one ticket to trade between those two, I would go with IWM. And that's the strategy. I mean, I've been screaming about this on Twitter, and if someone with discipline just followed that, they would end up, profitable at the end of the year. Now, where the trader will fail, obviously, is how do you pick the top? How do you pick the bottom? It's easy enough to say if it closes at the bottom at the end of the day, that's easy, or closes at the high at the end of the day. So what I do use is ATR. So ATR, I use that to assist me. So for instance, if I see, halfway through the day that the low for the SPY, for instance, was like 280. I know the SPY moves $3.50 based on RSI. RSI, right now, I think it's based off of RSI 14, if I'm not mistaken. So 14 days of trading. If you wanted a more accurate RSI with more data points, recalculate that RSI for the entire 52 weeks. that'll give you 250 data points and a more accurate RSI over a long period of time. So all I say is, for instance, half the day or the last 2 hours of the day, where is my low, where is my high? So if my low on the SPY is 280 and I see it's going up, what I do is add, if the ATR is 3.5, I'll add 3.5 to 280, which is 283.50. And then as it approaches 283.50, depending, and this is important, depending on the time of day, if it's close to that ATR, then I know statistically it's going to make that ATR and be around that ATR. So as long as it's near the 350 mark or the ATR mark, obviously some days it will be a little lower or a little higher, but I'm using ATR as a rough gauge for the intraday range for that day. And that's how I kind of calculate what's the top or the bottom. Most traders, I'll tell them, if you know nothing about technicals, just wait until the last hour or two of trading. Even wait for the last hour, because that's when volume pours in, and then you simply go in the direction of the trend in that last hour or last 2 hours. As long as your ATR requirements have been met, then you'll be fine. And all you need to do is then swing that. If you catch near the high of day or near the low of day, swing the reversal on the option side into the next day. And I guarantee you, people can go back test this. In a whole year's worth of data, 250 trades every day of the week, you will only lose 25 of those trades. And yep, that's one strategy that I have for people for swing trading. Day trading is kind of a different story. I mean, you're still playing the mean reversion, RSI, oversold and stuff, but I can save the day trading strategy for another day, but I really, really wanted to share that with people, that whether it's Tesla, like study Tesla, Facebook, or all the stocks you're interested in trading, look to see if you get in at the high of day or low of day of those and trade the reversal. What is your percentage win rate if you were to do that?
And Max, what is the time frame that you're using for the swing?
So the time frame for that, for swing trading, you can use the hourly. I think the hourly kind of is a good, it's kind of midway between if you want to day trade and if you want to swing trade. The hourly would be the best. But in terms of your entry, if you want like a crisper, more defined entry, you use a shorter time frame, like the 5 minute. I mean, I typically use the 1 minute just to time my entries. And then if I need to swing trade it, then obviously you're looking at the longer time frame. And what even further puts this in your favor is when you're trading on the 1 minute, always zoom out to get a bigger picture. So trade on the 1 minute, then look at the 1 hour, then look at the 1 day, then look at the 1 week, and see if there's a reversal. So let's say the SPY, like right now, over the last 2 days, the SPY has been rallying up. It looks like it's actually reversing from the last 2 weeks or so that it's dropped. So in order for you to even further increase your odds, if you appreciate the long-term trend and you go in with low of day calls because the longer trend is telling you that it's on a reversal and going up, then you are even pushing that 90% or 95% success rate even closer to 100%. But assuming you don't even follow the long-term trend, I'm just saying you take each day as a separate day with no appreciation of what it's doing long-term. In spite of any gap ups or losing days, If you just do what I told you, guaranteed your success rate for trading will be 90%. And then let me reiterate, I'm not saying that you're going to make 100% or 50% or 10%.
Sure.
What I'm saying is if you hold it into the next day, your probability of breaking above even, of being profitable, whether it's 0.5% or 100%, that probability is 90% and closer to 100% when you trade IWM.
That's great information, man. And just for the people who are watching right now, the ATR would stay at its standard level, or are you guys changing ATR as well?
So right now, let me see. What is the ATR on the SPY right now? What I do as a rough estimate is just go to FinViz and see what ATR is for, because ATR will be is for 14 days.
Yeah. Are you guys using the standard 14 on that?
Yes.
Okay.
Yes, and like I said, if you did want a more representative, because since I've back tested it and traded this for a year, change it. Instead of 14 days, you can download the formula or look at app and do it for an entire year as opposed to just 14 days.
So you put all right, so I don't think you can put 265 in there, but you're saying that you can download it and have it, upgrade for a length of 265
figure it out.
365 or whatever that days is.
Right, exactly.
Business days.
But I mean, the ATR by itself is pretty accurate because you're looking at almost close to 3 weeks worth of trading. 14 days. That's not bad. It's only 14, but that's why I'm going out as long as a year, because instead of just working with 14 days, you're working with 250 data points. And anyone who studies statistics will tell you there's a fine line between if you study too few number of trades, it's not going to give you any statistical significance. You have to go out into the hundreds. And I've looked at the SPY in 1 year. I've looked at 10 years worth of SPY data. And this formula works. This strategy works for as far out as 10 years. It doesn't matter how it's trending, how it's moving. This is a mathematical, statistically proven formula that if you catch the high of day and buy puts, low of day buy calls, you will be successful 9 out of 10 times. And I'm not talking about 3 trades. I'm talking about 50 trades, 100 trades. And so, there are not many traders that actually, manage their risk that much. So let's say you start off with $1,000. My recommendation will be start with $100 and at least put 10 trades in. The key actually is not to vary the position size, and this is extremely important, more than even the strategy that I've talked about. Every trade has to be equal in importance, or has to have the same level of importance. So like when you flip a coin, each coin flip is an independent flip. So you have no prophecy to say tomorrow I'll win or I will lose, but like over 50 trades, over 100 trades, you can actually have the edge. So the key is, let's say you start off with $1,000. Each trade that you make must be the same amount of money. And, people can argue with me about that. That's more my own philosophy, where each trade has to be equally weighted. So today you trade, you go in with $100. And mind you, I'm not talking about, these professional traders that make 4, 5, 6 trades a day. Right. This is simply trading once a day, picking your trade, with a sniper approach with the strategy that I'm talking about. You put in $100. Yes, it's not going to be a lot when you say, "Oh, I made 20%, I made $20." But if you know that this works 90% of the time,
the compounding effects of it,
exactly,
it works best.
exactly, Sal, exactly. And so when you manage your risk and treat each trade equally, it then means that you can manage your risk successfully. And by doing it that way, it's not like, "Oh, I've only got $300 in my account, let me risk it all," and then you lose all the $300. So you need to break that down. I would say a good amount to start off with is $1,000, and each trade put in $100, and put in good like 10, 15, 20 solid trades for you to figure out whether the strategy works or not, or whatever strategy you're using. That's key. It has to be done over a long period of time, because even in 10 trades, that's not enough. You've got to do 20, 30. The more trades you make with the same strategy, the more knowledge you have as to whether that strategy works. And I'll end it there. I mean, if traders just this type of strategy is boring. All of us, we're trying to chase like the 1,000% gains.
Right.
Trading should be boring. Where when you start making it exciting, something's wrong. Your system has to be systematic. It's got to be boring. It's got to be like, all our 9-to-5 jobs where every 2 weeks you get a paycheck. You're not doing cartwheels every 2 weeks when you get a paycheck. You know a paycheck is coming.
Right.
And so trading you have to have the same psychological aspects as you do like when you work a regular job. So maybe today you make 100, but 100%, emotion-wise, you should be even keel, whether you make 100%, 1,000%, -5%, -10%. But the key is sticking with your strategy and persisting with it over a long period of time.
Absolutely, Bats. And I think, because of that, we've seen both of us, so many people come and go and stuff like that, because a lot of people don't realize that it's not fun and games every day. You really do have to kind of just knuckle down and accept the day-to-day thing. How many people in your room are actually following the strategy as applied? I mean, has it been difficult to get people on board with it, or?
So they are. I mean, sometimes I don't even follow my strategy. So the story I like to tell is September of last year was my biggest month. The SPY was still the problem with me. I always have a long bias, so I have a problem buying puts or shorting a stock. September last year
are one way or the other.
Yeah, so September was my biggest month. I made $40,000. That's 40. I made $40,000, which, for some of the professional traders like Ross Cameron, I think that's actually his daily target, is where he makes 40 or 50,000 a month. But I made 40,000, and I think I only made out of the entire month of trading every week, I was following PDT rules. So this means I was only trading 3 times a week. I made $40,000. My position size varied between $1,500 or $5,000 per trade. I traded maybe as much as 20 trades. I think I only lost 1 trade in those 20 trades. And then, of course, I got cocky. I thought I was the shit, because I'd been trading the SPY and IWM since April, and I wasn't losing. I just wasn't losing. I could trade for a month and a half, and only have 1 loss, from all those trades. And I thought, I'm the shit. Nothing can go wrong. So if you look at the SPY in October, you will see that that's when the SPY started selling off. Yep. Now, I'm long bias, and every trade I was going in was $5,000. I decided to put $40,000 into one trade.
God damn, are you serious, Bats? You never told me about this.
Well, you haven't been coming on the
Okay,
show.
yeah,
that
you're
much.
right, but
And you
god
took a
damn.
hiatus. Yeah, you took a break, and so I put, instead of my regular position size, which was always $5,000 or less, I went in with my entire profits of September, $40,000, and thinking, hey, I don't lose, and it's not going to happen to me. And then it was a perfect storm because I wasn't working from home. I was traveling, and so I wasn't watching it. I picked an expiration of 1 week. I went in on a Friday, which, by the way, I don't recommend.
That theta burn is
Never
horrible.
get in on a Friday, and then never get in on a Friday and wait for the weekend and try to preempt what's going to happen the next week. So bad idea there. And then I held throughout the week. I'm like, oh, I'm down 5,000. I mean, I've got 40 grand. This thing turns in my favor most of the time. I was playing the statistics. Before I knew it, the trade was going further and further against me. From the $40,000 I put in that trade, I got back $800.
Damn. God damn. Oh shit.
So win rate, and I went through this phase where I was like, at the end of the day, win rate is actually, it doesn't matter,
Yeah, it doesn't really matter.
you could have a 95% win rate, and then in that 5% where you lose, you could lose your entire account.
Yeah.
So actually win rate, when it's not under control, means diddly squat. Yeah. And so from that point, I then dialed it back and I said, okay, what did I do wrong? I went against my rules, like holding it over the weekend. I don't do that. B, I more than 8 times my regular position size, I went in on one trade. And had I just stuck with the $5,000, I maybe would have just lost that trade and just lost $5,000. I was better donating, the $40K to some
homeless
charity
shelter or
of
something.
mine.
Yeah.
Exactly. So now I've dialed it back. I'm not going in with so much money, but I'm now. This is what kind of led me to say each trade. And, reading about the psychology of trading and why traders fail, Absolutely. Each trade has to be seen, has to be equally weighted. So had I just stuck with the 5,000 that I was putting in per trade, it would be a different story right now.
Man, it's so funny you say that because 5,000 is
Yeah.
also my limit as well. I think that's a very smart number. Yeah, I said that earlier in the show.
Yeah. Okay.
Now, Bats. So obviously we're still on that system now. Are you more consistent with that system now? Or you feel like you're more disciplined since your loss?
Okay, so this is the funny bit. I've always been consistent with it. The problem I have is managing my risk.
Gotcha.
So I've got a few different accounts. And like, if you've got like 5,000 in an account or 10,000 or 20,000, it's all about, okay, what's the least amount of money I can put in there to get reasonable returns where I won't blow up my account in 2 or 3 trades.
Right.
And so what I found for me, 5 or 10% of your account seems to be the magic number for me. And in fact, my goal in terms of percentage gains, I'm not one of these guys that tries to milk a trade and get as much as I can. 10% is normally my target, which is very easy to get with options.
Absolutely.
And so if I find that I'm up 10% and I feel I can't get any more, I'm out at 10% regardless of what happens.
Wow.
And I've had to train myself to say, I'm out now. Oh, I left 60% on the table, and I've had to train myself to be okay with that.
Yeah.
And so 10%, so even aiming for 10%, my average typically for day trading is about 15%, even though I'm going in with a mentality of 10%, my average is near about 15%. On swing trading, it's almost double that. The irony of it is I actually don't like to swing trade, even with all the math in my favor. I always like to get in and get out on the same day, so I'm not exposing myself to unnecessary risk. And so those are the demons I have to battle with. But nowadays, I'm actually doing it equally, where I both day trade and I swing trade. And the thing is, once you've got the math, or once you have a strategy that's statistically or mathematically proven, then the other element, which is the X factor, is just your gut of knowing the stock, the time of day when you get into that stock. And for me, because I've just focused on IWM and the SPY, I know these stocks or these tickers really, really well. And so for me, what actually helps me is I'm not distracted with jumping from stock to stock. Some traders are able to say, you know, like the strict day traders are able to say, what's up pre-market? Let me trade this.
I can't do that, right?
Yeah. So you know, happy to share that with you guys. And you know, my Discord room is still going, and I'm always trying, you know, if I'm working from home, every, 10, 15 minutes, I'll post charts up. I'll tell people before I'm getting into a stock what I see, and warn them that, hey, we're approaching high of day, let's get puts here, or we're approaching VWAP, which I didn't really talk much about my day trading strategy for the Russell 2000 and the SPY. We'll leave that for some other day, but I just felt I had to get this off my chest, because this is even the first, I've been trading for at least 10 years, but this is the first time where I've pursued the same strategy for more than a year and actually, produced results from it where I can say this strategy gives you an edge. And as always, Sal, thank you so much, because without you, I think most of us who know you and have, watched your show, we would be nowhere right now. And if it actually wasn't for you, because a lot of, people don't know why I trade the SPY and IWM. If it wasn't for you who asked me, well, can't you trade like funds and stuff like that?
ETFs,
I wouldn't be where I am now. And so that, ironically, because I focused on just those two ETFs, I know them really well. I can literally trade them blind. I mean, I can walk in, look at the chart, and say, where is the price? What's the high so far? What's the low so far? What's the time of day? And where's VWAP right now? Where's the current price? And I can tell you without even looking at the chart whether you should get in or not at that specific point in time.
There it is, ladies and gentlemen. And Bats, thank you so much for coming on and explaining your process.
Man. Yeah,
really
thank you. I ended
that.
up, you know me, man. I like talking and talking, but I figured we hadn't had a chat in a while. But it's very important. Focus on a few tickers, learn them really well, find a strategy that works. But for God's sakes, don't dump the strategy because it hasn't worked in 3 or 5 trades. You've got to give it more than that to be able to determine if it works. Appreciate it, Sal.
Thank you, Bats. Appreciate you, man.
Take care, man. Bye-bye.
Yes, indeed. Shout out to Bats Scientist. Thank you so much for calling. And, yeah, man, Bats was in a tough situation because his wife had gotten a job, and it had limited his ability to make moves because the job required that there were certain stocks that he couldn't trade because his wife's job had some exposure to some of those publicly traded companies. So it put her job at risk if he were to involve himself in those kind of activities. So when he called in and explained how he was no longer going to be able to call the show, and I was like, no, don't go away. Like, look into ETFs, and come to find out they were approved for him to trade, and that's where it's been ever since. So Bats, yeah, man, now that I'm going to be talking more often, coming back live more often, because people told me that they really missed the show, so I'll come back and do it. I appreciate you if you stop in when you have the time, bro. I always love having you on. Always do. We appreciate you. Yeah, definitely his information, you're going to have to listen to it more than once. I don't think this is a system where you hear it one time and you're like, okay, run with it. You're definitely going to have to hear it more than once. Definitely check out his Twitter page at Bat Scientist. Just as I says, he's actually a real scientist. So that's why it was incredibly more detailed than just, hey, buy here, buy there. So reach out to him if you want to get a breakdown with him on that. And someone had mentioned what's going on, Poker Pro, about Bank of America. I mean, from the way I trade, obviously this is a position I would have gotten out of here by now, as we're back above the 10 and now trying to in that gray area where we're not sure where this is going right now. And it's got to make a definite decision on where it wants to go here. So honestly, I can't help you with this trade where it is now. All right, we really are sideways, and we got some very indecisive candlesticks too that aren't helping the situation here as well too. So but again, we talked extensively about the financials and. All of them pretty much the same. Citigroup, JPM. All right, that one's actually a buy on my setup here, 25.10. But we'll see. We will see. You say you're rolling the dice. Are you going long, Poker Pro? Yeah, reach out to him if you want to know. I saw somebody wanted to find out where his Discord room at. Reach out to him at Bat Scientist on Twitter and get in there and learn that trading method. All right, keep in there and learn that trading method. If you're looking for a swing trade that incurs multiple days of trading, check out my trading strategy, the only trading strategy you'll ever need, which is the title of the video. Check it out there in my list of videos. It's a moving average strategy. Bought 20 calls. Okay. Yeah. Solid play. We'll see what happens to it. Yeah, the stock was down a little bit today. But I saw some other stocks. Again, we just looked at Citigroup and all those other ones that kind of popped up a little bit today. But obviously we'll see what happens. XLF looking like a buy here, actually. All right. In the buy territory. 6/14 expiration. You got a good expiration. I was worried. I was a little worried you were expiring tomorrow. I was like, as long if we were expiring tomorrow, it's kind of little. It's a pretty scary day to trade tomorrow. But it's got a lot of news is expected tomorrow, man. All right, I'm gonna wrap the show up here, but we got a lot of news coming tomorrow. Of course, like I said, the job numbers, payroll numbers tomorrow, unemployment rate tomorrow, and for the people who want rate cuts, they all got to be bad. They all got to be bad. All right. So, ladies and gentlemen, I've kept you now on for 2 hours, maybe 3. I'm not sure. I haven't seen it yet, but I want to appreciate you guys again for coming to watch me, as always. Wrap the show up here. Shout out to all the people who are in the chat room right now who watched. I know we got some people who watched the whole thing. Poker Pro, I appreciate you. I know you came in late, bro. We've been on for a long time. Bat Scientist, as always, man. I'm humbled by your presence. I know we had some other people in here too. Stock God was in here too for a second. Eban R, Poker Pro. I know I mentioned you twice here. Callie Rob, appreciate you stopping by, man. Long time listener. Three Hooks, you as well, man. Appreciate you. Eban R too. Alex Rael. Alex Rael, you changed your name, right? You were something else for a while, because I think you still have the same pick, but you used to go by another name. Thank you for David by stopping by. Jason Epps, you too. Appreciate you, bro. Yes, indeed. All the people who are in here. Big Zini, I saw you were in here earlier too. Juan Diaz. Rambo Ron, appreciate you, bro. Thank you so much, man. We're here to get our dreams accomplished, man. We're not here for anything else but to accomplish our financial goals. And being able to rub heads together like this, it's always a good thing, man. So I'm grateful that you guys come in here and join me for us to do that. And it's just sometimes sad because sometimes I wonder, like, man, I want the whole world. I wish I could get the whole world in to see this. But sometimes maybe it's not meant for the whole world to hear it. You know, maybe it's not meant for, 2,500 people to hear it on a nightly basis. Maybe that's just kind of what it's got to be. Like, some people just think what Bad Scientist said, that it's boring. They get in, they do 2 or 3 trades, they give up, they quit, and they go away. They might stick away for a month or 2, then they go away. It is what it is, man. Stock Z Alerts, appreciate you. Oh, you too, another long-time listener. Yes, indeed. Alex CTD, appreciate you. Yes, indeed. Yes, indeed. I appreciate you. All right, guys. Be back here Sunday. Whatever happens tomorrow, we'll discuss it on a quick show on Sunday. I always say that. But bring your favorite tickers. Let's talk about it and what the week ahead could look like now with all the new data that we're going to be coming out tomorrow. I have no doubt we're also going to see a new development on the geopolitical front as well. So that's going to be really interesting to see how it affects. I'll be coming in on same time Sunday because I definitely want to be able to come live when the futures market is open so we can get an idea of what at least what Asia is doing, what the market is sensing for the Monday trading day. All right. Appreciate you, Anthony Smith. With that being said, ladies and gentlemen, again, T. Kelly, thank you. I appreciate you, T. Kelly. He said it's exciting, not too boring at all. Some people do think that. Some people do think that the stock market is just like too much for them, But the simplicity of the trading styles can get it there for you. All right, ladies and gentlemen. Till next time, trade well. I'm out.